Good morning, everybody. I'm Eureka John, and you are at Eureka Street Crypto, broadcasting live from Leander, Texas, on float.app. That's flote.app. And it's 6:21 in the morning, November 5th, 2021. This is episode 318. Now, yesterday was episode 319. I know that might be a little bit confusing, but yeah. I'm not always with it in the mornings. This is a morning show, and if you didn't notice, and sometimes I get my day numberings wrong. So yesterday I jumped from 317 to 319, and so here I am, kind of rewinding back a bit and getting 318 in there because I don't cheat. So yeah, so I'm gonna count every single day and every single episode and not try to bump myself up some episodes. I've been doing this video blog since October 24th, 2020, and been doing it every day since February 6th, 2021. And yeah, this is my journey into crypto space on documenting what I learn. And every single day I read some articles, I listen to some podcasts, and I try to learn something, and I don't feel I've truly learned it until I try to regurgitate it and say it outwardly, because I believe it connects different synapses of the brain whenever you are listening to something versus whenever you have to explain something. And yeah, so it's kind of a true test to see whether you've learned something or not. And so good, bad, and ugly. I don't edit this show. This is what it is. This is my morning show. And yeah. As you can see, I don't try to make myself look clean and pretty and polished. This is a raw morning show as it is. So, all right, let's take a look and see what the daily market looks like. This is not financial advice. I'm not shilling anything. I'm not sponsored by anybody, and I'm not your teacher. This is not teaching materials. So, okay, let's see what the old CoinGecko has to say today. Let me just stir the stick here and see what happens. Bitcoin's at $61,549.24, up 1.2% in the past 7 days. It's been sitting pretty static between 60 and 63, which is fine with me. I mean, it looks like it found a new place to be. So Bitcoin got to 60,000, was like, yep, think I'll pull up a chair and sit down. So which is good. I don't think we'll be seeing Bitcoin. I mean, we might see it drop down to 50 again. But you know, I'm not one to sit here and prognosticate. So yeah, if you want to prognosticate and all that type of stuff, go look up the Plan B. I listened to the interview between Camila Russo and Eric Wall yesterday, and I've seen Eric Wall, you know, tweeting across the tweet space and stuff, and the guy's an interesting dude. He always takes a contrary opinion to pretty much everything. Him and Chris Black, both of them, you know, in different ways. You know, they both are contrarians and highly critical of a lot of the space. But, you know, I think they do so because they feel it's their responsibility, and they want to hold the feet to the fire. And that's kind of what crypto Twitter does. It allows, I mean, a lot of people don't know how to handle that type of stuff, but it really, it has, speaking of prognostication, here's Plan B, and Plan B is the tweeter that came up with that rainbow style looking Bitcoin chart, not the rainbow chart, which is what I'm leading to. But a lot of people treat the Plan B chart, the stock to flow model, as religion. So let's see here, stock to flow Bitcoin chart. So let's see here. I'll pull this up, and you will probably, if you've been in crypto for any time, any little bit of time, you will definitely recognize this chart. So yeah, that's your standard stock to flow model. It tracks the halvings that happen every 4 years of Bitcoin, and pretty much the Bitcoin valuation has fallen along this stock to flow model, which is why a lot of people follow it religiously, and a lot of people are placing their bets on the future of Bitcoin according to this model. So yeah, Plan B is the tweeter guy. I believe he's in Denmark or something that has created that chart, and yeah, it follows a specific algorithm. So anyway, so Eric Wall, he's a contrarian, and it's a good interview. And let's see here. It's on the Defiant, and let's see if I can find it here, just so I can pull it up, and I'll link it in the description. The Defiant, Eric Wall. All right. So yeah, the Defiant is Camila Russo's media outlet slash podcast and all that stuff. Yeah, so this is it. Arcane assets. Bitcoiners protect Bitcoin against shitecoinism. All right, so let me actually go to the link and we'll pull it up for you. All right, so yeah, if you get a chance, if you're on a commute or whatever, pop open this. Like a lot of people see his tweets and yeah, he seems kind of like a dick, but whenever you hear people really talk, you realize that they're not that way. And this is kind of his Twitter persona of being that dick and asking a lot of questions. And he wanted to expose Plan B as far as being not people. He didn't want people to be disillusioned, thinking that Plan B stock to flow model is one, the only option out there, and then two is the religious go-to for Bitcoin price prediction and stuff like that. Like Bitcoin is not going to follow a chart. A chart should follow Bitcoin. Yeah. Yeah. So he created this fictional rainbow chart to kind of, show people that you can make a chart look like anything you want and make it all pretty. The problem is people started following this this rainbow chart in the same way that they did that they do the stock to flow model. And so here, if you look at it, they've created this chart, and this rainbow seems to just follow perfectly, the Bitcoin pattern, and it looks so amazing, and it's a pretty chart and all this stuff. But yeah, like I said, a lot of people just started following this rainbow chart as if it's gospel. So I thought that was pretty cool, and when I was listening to it, I was just kind of chuckling to myself. And yeah, yeah, I mean, this one of the one of the good silver linings that I have out of my hour-long commute down to work, or hour and 15 minutes, and then hour and 15 minutes back. I'd have to literally go from suburb to suburb across the entire city. So yeah, and yeah, he explained, because I'd seen this rainbow price chart before. I hadn't really paid much attention to it, but I didn't know the story behind it was, see, as you can see where it says to sell in the red and then to buy in the blue. And yeah, it's a pretty chart. And I can see why people would buy into this, but he made this chart in order to counteract all the hype going on around the stock to flow model, which I don't think the stock to flow model is bad. I think the stock to flow model is great. I'm going to follow this dude. And yeah, but the stock to flow model shouldn't be, gospel. It shouldn't be canonical text. And so let's pull that stock to flow model back up again. Stock to flow. Oops. Bitcoin, Nitcoin. Let's see what happens. My search turned out to be Nitcoin, so let's see if it pulls up. Oh man. All right. Okay, here we go. Man, I was just gonna click on it. Anyway, so yeah, this is the stock to flow model right here, and this is the rainbow chart. The rainbow chart is a joke. The stock to flow model is not a joke. It was, made with all serious intent. However, now that we have institutional money going into Bitcoin and all this stuff, and DeFi has been jumping into the crypto world, a lot of very wealthy companies and investors and hedge funds and pension funds now are all going into Bitcoin. There's an article that was just put out that I haven't read yet that talks about Bitcoin fiduciaries. The fiduciaries are coming, and if you don't know what a fiduciary is, you have a broker in investing, and then you have a fiduciary. And a fiduciary is somebody that is always legally bound to have to work on your behalf. So let's see if it defines it here. And for I didn't have any finance background before I got into all this stuff, so I had to get in the loop about what the difference between a fiduciary and an actual broker was. So let's see here. Financial advisor, sorry, financial advisor, not broker, does not equal fiduciary. So in the US, the term financial advisor is not defined by any regulatory authority. The title does not correspond to any specific exam, license, or governing body. So even when you hear people say, I'm not a financial advisor, which I'm not a financial advisor, but even if I were to claim I'm a financial advisor, it does not mean that I've taken any exams. I don't have any licenses or any type of authority from any governing body. It's an umbrella term that virtually anyone who's passed an investment licensing exam, so um, can put on their business cards. Okay, so I guess you do have to pass an exam, but who knows where that exam comes from. Many in the crypto industry wonder when financial advisors will usher in the mass adoption of cryptocurrency for the middle class. To answer this tricky question, we need to understand the incentives of different types of advisors rather than think about job title or license. It's easier to categorize advisors based on what form of crypto adoption they're motivated to recommend. So, who? Banks, Wells Fargo, JP Morgan, Solutions, custodial cash management and storage. Wall Street, Goldman Sachs, UBS. They do hedge funds and advanced trading. Silicon Valley, A16Z, Pantera Capital. They do seed funding and venture capital. Financial salesman, which is Edward Jones, Mass Mutual, Bitcoin, ETFs, and Grayscale. And then we have fiduciary planners, investment firms without commission licenses, non-custodial DeFi crypto education. So this is the type of stuff that they're allowed to recommend, and all these different actors right here. Every financial advisor will be discussing crypto with their clients in some capacity. The agenda of the conversation will be driven by the incentive structure of the business model they operate under. So if you work for a bank, Wall Street firm, or VC, your job is to onboard client into a product owned by your employer. So don't think that financial advisor has your interests in mind. They have a manager and they have to sell these products to you. That happens in a lot of industries. They based on their recommendations to you might not always be the recommendation that is tailor suited to you and for your benefit. It might benefit the pockets and the commission check that salesperson gets. So be wary with all things in life. If you're trying to build out a house and they give you these options, what does that salesperson get from those options? Even in the medical field, and the doctor's trying to prescribe you medicine. What does that doctor get from prescribing that medicine? Do they receive kickbacks, rebates, duffel bags of cash from the manufacturers of all these products, financial products included? I hear tons of stories about financial advisors and doctors and people, all types of salespeople receiving all types of kickbacks for stuff that they are able to get sold. For instance, security services. Whenever somebody's buying a house, you always get that phone call from the person trying to sell you the latest security service plan. And I mean, seriously, you can just go down to Best Buy and buy yourself a set of cameras and hook it up to your Wi-Fi yourself for like 1/4 of the price. Anyway, I digress. Anyway, there's always some kind of motive behind it. Well, fiduciaries seem to have a little bit of a different type of model. The best hope for introducing permissionless finance on a massive scale resides with the fiduciaries. You may have seen several definitions of a fiduciary, but the simplest one is a financial professional who's compensated solely by their client. So whenever you do well, your fiduciary does well. So that's the main incentive. So anyway, I won't go down into the details of this article here, but I just thought it was kind of interesting. Let's see here. Planner DAO is not waiting around for TradFi to discover. So they're introducing the whole concept of fiduciaries into DeFi. So Planner DAO is not waiting around for TradFi, traditional finance, to deliver a glossy brochure telling us what is best for our clients. We are building the foundation our profession needs to empower our clients. We have created the Certified Digital Asset Advisor designation, the CDAA, the most comprehensive cryptocurrency training program for financial advisors anywhere in the world. The designation is decentralized, meaning anyone, including Bankless DAO, can be an education partner of the DAO. We recently received a grant from Nexus Mutual to build the Financial Advisor DeFi Toolkit, where we are spending 6 figures to answer the most pressing legal and technical questions concerning managing our clients' assets directly on chain. This toolkit of legal opinions, sample docs, and protocol audits will be free to all financial advisors and maintained by the DAO. So they're working with Nexus Mutual. Just recently, I interviewed the CMO, Chief Marketing Officer, Dan Thompson of Insurace.io. I wonder if they're going to be jumping into this game of fiduciary type of stuff as well. So I don't know. It's interesting thoughts regarding that whole model. So let's get back up here. And then I talked about Eric Wall, and I got sidetracked. Anyway, this is a good podcast for you to listen to if you have the time. I definitely highly recommend it. It you know it takes away some of the whole misnomer that all these people you see that have contrary opinions and rile people up on Twitter are complete turds in real life. And he doesn't seem like a turd in real life. He actually seems like a good dude. So yeah, never judge somebody just by some contrarian activity you might see on the Twitter space. All right, so let's go back over here to my bookmarks. I was just gonna kind of explore some of my bookmarks today. I was gonna go into Rocket Pool and stuff like that because they had a big announcement of them going on mainnet, but I don't have the time for it because I really wanted to explain in detail some of the staking mechanisms and stuff like that for Rocket Pool right here. But Rocket Pool will be launching on mainnet again on November 9th. So huge thanks to our supporters. Decentralized mainnet staking will soon be a reality. All mainnet details and startup lineup of Oracle DAO members featured here. Okay, so they're going to be going on to mainnet again. I'm going to talk about that probably tomorrow because there's a lot of stuff I want to cover in Rocket Pool that's important and a lot of concepts. I did a Rocket Pool video way back in the winter of 2020, just after I first started. It was like one of my first videos, literally. So I didn't explain Rocket Pool very well back then because my understanding was only limited. So I would like to explain Rocket Pool again. I do have some Rocket Pool tokens that I bought way back in fall of 2020, and it seems to be doing pretty well. But I just love the whole concept of being able to allow any everyday average Joe to stake Ethereum, because Ethereum, if you want to stake Ethereum right now, if you want to run a node, you have to have 32 ETH. And so you have to have 32 ETH to actually stake on Ethereum. So Rocket Pool allows people with you can run a validator with 16 Ethereum, or you can stake in those validator pools for even as little as 0.01 Ethereum. However, I probably wouldn't recommend staking 0.01 Ethereum because the gas cost will probably be double or triple or quadruple that. So yeah, just some things to think about when dealing on layer 1 Ethereum. So anyway, here's one I bookmarked. Your Ethereum address is going to be your digital identity for life. Take good care of your keys / mnemonics. We are going to make it. Regardless of what you think about it or not, and I've talked about this several times, all these POAPs that we're getting for attending all these things that I do, and like in the DAOs, and I attend community calls and AV guild meetings and everything like that. I'm receiving POAPs for these, and I'm talking about being an advisor for a certain crypto project, and I will receive a POAP or an NFT that shows that I am an official advisor for that project. So what does that mean for me? Well, that means that POAP or that NFT showing that I'm an official advisor that can't be changed or altered will be up on the blockchain. And so I could foresee in the future websites, Web 2 websites that are transitioning to Web 3, websites like LinkedIn and Glassdoor and stuff like that, implementing Web 3 where you can plug in your Ethereum wallet address on MetaMask, and any potential employer could see all the POAPs that you have, including the POAP that shows that I'm an advisor for XYZ project. I'm not going to come out and say it just yet because we're still dealing with technicalities and stuff. But I think it's an interesting concept. So is your Ethereum address going to be your digital identity for life? I don't necessarily think so, because you can migrate you can send your NFTs from one address to another address. So if one of your MetaMask addresses gets compromised in any sort of way, or if you just want to separate different aspects of your life into different wallets, you can do so through this whole idea of decentralized ID, and carrying But the thing is sometimes getting verified on your in your MetaMask for a Bright ID, for instance, makes you go to a call party, a verification party, in which you have to meet and see people directly through the video camera, and you know that they're human and stuff like that. The Proof of Humanity does this as well. So there are some nascent identity solutions popping up that are kind of attaching people's humanity to MetaMask addresses to make sure that they're actual people. Now, how far this is going to go, as far as the social graph, will it start attaching to your Twitter and all your tweets and everything you do in life and create a social credit system? I don't know. But all the foundation is being laid right now. So Sandeep of Polygon says, your Ethereum address is going to be your digital identity for life. Take good care of your keys / mnemonics. Always make sure you take good care of your private keys anyway, regardless. Yeah, with all this POAP NFTs, and you have things like Bright ID and stuff like that, and Proof of Humanity, laying the foundation and the groundwork. For instance, I tried to jump into a Discord the other day, and I could not jump in that Discord until I was Bright ID verified. So that prompted me to go get Bright ID verified so I could jump into that Discord group. I believe it was Rainbow Rolls, actually. So that was a couple weeks ago. Yeah, in order to fully use that Discord community, I had to have my Bright ID verification. Which, is that good? Is that bad? I don't know. But right now it just is, and I'm kind of just feeling it out and seeing where all this is going to go. Let's scroll on down. There's Mark Zuckerberg. I talked quite a bit about the Metaverse yesterday. I was recording the Metaverse Think Tank episodes with the Metagame Hub DAO guys. So anyway, there's that fiduciary article. I'll link that. There's an interesting Bitcoin commentary here. Jason Lowry, I guess he's a big Bitcoiner. Somebody, there's the whole argument that Bitcoin is proof of work mining, is terrible for the environment and all this stuff. I don't buy into that argument because previous to the job I have now, I came from the energy industry, and now I'm in the commodity industry for my in real life job. And hopefully I will transition my way out of that into full-time crypto and podcasting producer and all types of stuff like that. But in the interim, I still have my in real life day job, and it deals with energy and industry and commodities and stuff like that, and real life stuff that a lot of people would claim pollutes the environment. And so I have a hard time believing all this rhetoric about wasteful energy and stuff like that, because you even see some of these so-called solutions that people are putting out, and those solutions, solar is heavily reliant on the products made to do that solar, and all that is heavily reliant on carbon type of products and carbon type of processes as well. So yeah, there's really no getting around that, and sometimes the expense of installing all that renewable energy type of solutions it would take decades to recoup through the amount of power that is gained through the renewable resources. And Bitcoin is using solutions such as hydroelectricity, geothermal electricity. They're doing things like burning off abandoned pools of natural gas that would have to be burnt off anyway, and so they're putting mining operations there in stranded pools. And yeah, I mean, I remember by my house, and where I grew up outside in the suburbs of Houston, there was just this open natural gas line, because you can't really do much with natural gas except for just burn it off if you aren't going to use it. So is this open natural gas line, and I was in high school at the time, and we would cross this railroad bridge on foot, and hope the train wouldn't come, because it went over a river and there was no walls on the side, just like the Lost Boys. And some people did hang up underneath of it while trains were going along. I would kind of duck on the side of it. Yeah. Anyway, I digress. We would cross that bridge and go over there, and there was this huge pit with this little pipe sticking out, and this massive, like 15-foot flame just shooting this, just burning off this gas. And I was like, wow, man, just goes 24/7. It seemed like forever to me at the time because I was in high school, and that we call it the devil's asshole. And it was just burning all the time, the entire year. And yeah, and I had a lot of fun out there. We'd drink our 40 ounces, throw rocks at the train. I actually got a class ring, that was that year, and I threw a rock at the train, and that ring slipped off my hand as I was throwing a rock. And yeah, I lost that class ring forever, and I was so proud of that, but my mom thought I sold it for booze. Anyway, so I digress. Anyway, so we were talking about just wasted energy that would otherwise completely go to waste. So imagine if somebody were to use that LPG there and use it to power a generator that would be mining Bitcoin that entire time instead of just letting it just be burned out into the atmosphere. So anyway, let's get back to this tweet. So Mark Liebman tagged Jason Lowery saying, more compelling uses for energy, growing food, heating, and cooling human living spaces, transportation, artificial lighting, communications. My property rights in my home, vehicles, bank accounts, investments, and businesses are pristine, defended by centuries of law and regulated institution. Meanwhile, an overblown argument for decentralized blockchains has led to the theft of billions of crypto assets from the new, mostly unregulated databases that purport to help people make transactions in these digital popcorn farts. There is a chance that Bitcoin ends up valueless in 5 years, that it retains its current value of some some greater amount. The emperor has no clothes. Just my opinion. Why they have markets. Apologies for going off on that rant about that story about the environment and stuff like that, because that's not what this thread was about. I remember now, but that was another thread. But anyway, that was a cool story, right? But yeah, he's talking about that he thinks Bitcoin is just going to go to zero, that it's all a scam. So yeah, meanwhile, and he's talking about how his property rights are, defended by centuries of law and regulated institutions. Meanwhile, an overblown argument for decentralized blockchains has led to the theft of billions of supposed crypto assets from the newly mostly unregulated databases that purport to help people make transactions in these digital popcorn farts. There's a greater chance that Bitcoin ends up valueless in 5 years and that it retains its current value or some greater amount. The emperor has no clothes. Just my opinion, man. That's why they have markets. Okay, so here's Jason Lowery, and he seems like a smart dude, U.S. Space Force, MIT. Your claim that property is defended by law and regulated institutions is interesting. How are those laws and regulations defended? What is stopping someone from walking into your country and establishing a new law or a new regulation? Here's the real answer, Mark. Your property is only your property, in quotes, insofar as the energy expended to defend it as your property is actually defended by centuries of military energy expenditure. You outsource the defense of your property to people like me who spend a whole bunch of energy and take a whole lot of risk on your behalf to make sure that property stays your property, to make sure that your rule of law is preserved. Not willing to acknowledge this enormous energy expenditure dedicated as a service to you is an insult to people who risk their lives to defend these things on your behalf, using energy. What if instead of defending 100% of property in the physical domain, we can transpose some of it into cyberspace by monetizing a digital synthetic commodity? What if instead of paying the price of human lives to defend that property against invasion, we could simply pay an electricity bill? Still think that's not a compelling use of energy, Mark? Anyway, yeah, dude got burned. Mark Levin got burned by Jason Lowery. Burned. All right. So anyway, yeah, that's pretty much what it is for today. Tomorrow I'll go into Rocket Pool, and I'll be broadcasting from a little beach house that we rented, taking the kids down to the beach, and yeah, so all right, well, I'll link all this stuff in the old YouTube space. So I will, yeah. Let me think. Do I have anything else for today? I don't think so. I'm going to be posting the episode 2 of Metaverse Think Tank. It's on Spotify already and all the major podcasting outlets. So if you have a chance, go ahead and give that a listen. Otherwise, give a thumbs up on the YouTube or the Odyssey or the BitChute or whatever. And I'll be posting the video of Metaverse Think Tank episode 2 up on YouTube here momentarily. Alrighty. Talk to you.